aren't we below the trend line from a historical standpoint? There's perception and then there is the real number.
It depends on how far back you look, because if you include the late 80s and early 90s of interest rates pushing 17, 18%, then 6 and 7 is arguably below the trend line. However, if we start to look at the data that was recorded into the 90s and moving forward, and some would argue that that's a pretty responsible look back, that market norm is right about 6. So we're kind of living in typical normal times right now. And I think that that's a healthy thing to think about, because everybody wants to make sure that they're making a smart investment. No one wants to make a silly or destructive investment. And if it's around the rate, we can knock that domino over. We're good to go. We have a normal, typical, healthy interest rate. So the rates are there. The other things that we're looking at are inventory, days on market, home sales. So let's unpack those a little bit, if that's okay with you. So let's start with the cost of homes on the traditional market. Okay, they are still on the rise, but they're decelerating. We're now only about 7 or 8% above the 3 to 4% appreciation trend line. Here's what that means. Real estate, no matter the market, no matter the time, has historically appreciated 3 to 4% year over year. Right? So if you're going to buy a piece of real estate, investment, or for your primary purposes, it's always a good time to buy unless you're thinking about selling in the next 6 or 12 months. Right?
So that goes back to something you said is you know about the waiting, to buy real estate for the interest rates. If you feel they're a little high, you can wait for them to come down. Mm-hmm. I'd like to tell people, don't wait to buy real estate. No. Buy real estate and wait. Time is your friend. The appreciation, and what you're mentioning is you're probably getting to the appreciation factor and mm-hmm. the tax deductions and then some of the cash flow if it's an investment property. Mm-hmm. But I didn't mean to interrupt. Just that's we're getting show notes and our producer. You need to say that. Get in there. This is good stuff. This is good stuff. So
it's so true though, because we all are, myself included, we are so attracted to the shiny baubles and the get rich quicks. I mean, if you're not attracted to that, I wonder if you're a human being. But we have to be very discerning in that, especially in the investment world, because we can be sold an unrealistic bill, if you will, in this get rich quick scheme. If you're getting rich quick in a lot of real estate opportunities, I think that you need to exercise a lot of caution and you need to be very, very educated in your decision, because for the majority of us, it is buy it and wait. Don't wait to buy it. In other words, if you ask a lot of real estate investors when they wish they would have bought something, they would have said 20 years ago. And they would have also just wished that they would have never sold that first property, because every time we look back, the 3 to 4% appreciation trend line has always held to be true.
What's really interesting about that is that in my personal history, I purchased a home. My wife and I purchased a home in what we would consider to be the best time in human history to purchase a home. Mm-hmm. And that was in 2010. Uh-huh. During the economic crisis. And then we purchased another home at the second best time that we felt like was the second best time in history, which was during the pandemic. Yeah. And so when you really think about those things, yes, we were fortunate enough to take advantage of those patterns, right? So all that being aside, there is still opportunity out there. So I think the perception is that if you don't buy during those periods of time of extreme stress and downturn, then you missed the boat.
100%.
Is that true?
Absolutely. You can't time the market, but you can. I think the best thing an investor can do is be prepared when the opportunity comes, because timing it is futile. It is impossible. In fact, when we look back and figure out when we bought and when we sold, odds are it was kind of luck and circumstance, fate, whatever, fill in the blank. But the reason that we did it is because we were prepared to take advantage of the opportunity, because there's always opportunity when you buy the right piece of property. Because let's go back to the appreciation trend line in home prices. There's a big fear, at least in our local community, and I can speak better to the local community right now. The national number still supports it, but definitely local. There's a huge fear that they shouldn't be buying right now because they're afraid that the price of homes is going to fall dramatically and they will be upside down, because a lot of us might still be nursing a scar of 2010, 2008, when that actually did happen. What we're seeing in our numbers today is that while the average price of the home is on the rise. It's not as steeply on the rise, but listen to what I said. It's decelerating. It's not going backwards. So there's nothing that's suggesting that you're going to end up underwater, especially if you buy smart. You should always go into your deal on the front end. Don't ever go into a real estate deal hoping that it will work out on the way out. We buy on the way in every single time.
And then when we buy,
And you hear a lot of them say that's when you make the money is when you buy. You got to buy it. You got to buy it right. And it can be impossible to time the market, whether it's real estate market or stock market. But sometimes you do get lucky. Other times you're prepared. But it's also the time in the market, not necessarily timing the market. We just mentioned, if you can hold on to it for a long time. I have a lot of investors, friends that they're kicking themselves because they missed out on a house over $1,000 or $5,000
Right.
negotiation or came down to the final, and they're saying, "Gosh, I could have the tenant pay that. The house is worth $200,000 more than it was when I would have bought it. So I shouldn't have worried about the little things.
No.
I should have spent that extra bit of money to buy that house. It all would have been fine in time. And they came out great, whether, whenever they bought it, they could hold on to it, as you mentioned, more than 6 months, a year, several years, the longer, the better. They're setting